I think it's important. I talk about the role of dividend reinvestment plan. In high yield stocks, because this will certainly result or maximize your returns as an investor. When you invest in you know uh, you reinvest your dividends, particularly in high yield stocks, that will certainly yield to a higher returns. So I want to look at this topic, under a number of a number of points. Number one is compound growth. One is compound growth. So reinvesting dividends allow you to buy more of the shares of the company that issued the dividend in the first place, which will lead to a compound growth along the line. So as your dividend income accumulates and is reinvested, you tend to earn more dividends, on the new shares you bought with the earlier dividend you collected. And this will accelerate the overall growth of your portfolio. It's like a chain reaction. You get your dividends, you buy more shares, and additional shares will yield additional dividends. Additional dividend income will then buy more shares, and by so doing, you discover that there will be a huge compound effects over time. Number two is increased ownership over time. Increased ownership over time. So by reinvesting your dividends, you increase your ownership stake in the company without additional capital reinvestment. You don't need to put in more capital to buy additional shares. By simply reinvesting your dividends, you are increasing your ownership stake in the company. So this results in a larger number of shares, which would lead to more dividend income in the future. Further boosting your returns. It's a very fantastic idea. Actually, it tends to give you a compound result. Maximizing your returns and leading to a high yield at the end of the day. Number three is a maximized long-term gains. Maximized long-term gains. So dividend reinvestment is especially beneficial for long-term investors. Those who want to hold a company share for the long run, they will benefit the more from dividend reinvestments. So over time, the reinvested dividend can significantly increase your portfolio's value, as the compounded effects becomes more pronounced the longer you hold the stock. So you experience the compound effect of your reinvesting your dividends in the company stocks. Number four is smoothens market volatility. It smoothens market volatility. Reinvesting dividends during market downturns allow you to buy shares at a lower price, taking advantage of market volatility. If you are lucky enough to get your dividends when the stock price is low, you use that opportunity to buy more of the company shares at a lower than normal price. This strategy can help lower your average cost per share and boost your long-term returns. So please like this video and subscribe to this channel if you've not done that. Number five is cost efficiency. Cost efficiency. Dividend reinvestments allows you to automatically purchase fractional shares of stocks, which means that you don't need to worry about paying commission or fees, or accumulating cash to buy more. It's an automatic plan. Once dividend comes out, you reinvest. When the dividend comes out, you reinvest in the company. So, and it's done in some cases, it doesn't attract, commission or fee, is it don't charge you commission, or fee. So this help makes the process cost efficient and seamless. No fee, it's cost efficient and it's seamless. It's almost like an automated, procedure. You don't really need to contribute much. Automatically, the dividends is reinvested almost like on your behalf without you having to really do much. Number 6 is disciplined investment strategy. It is a kind of disciplined investment strategy. Reinvesting dividend creates a disciplined investment approach as it removes, emotional decision making. There's no emotion involved at all. There's no greed, no fear, no pessimism, no optimism. All those things are completely absent because the entire process is somewhat, should I say, automated, something of that nature. Other than trying to time the market or decide whether to take the dividend as cash or reinvest, the automatic reinvestment ensures consistent growth. You don't need to really decide on what to do. Actually, the entire process will make the decision for you. As the dividend comes in, it's automatically reinvested in the company. Number 7 is tax efficient growth. Tax efficient growth. So in a tax deferred account like your typical IRAs or your Roth IRA, reinvesting dividends avoids immediate tax implication. So allowing the full dividend amount to work towards growing your portfolio, which can be advantageous for long-term tax efficiency. You discover that the fact that these accounts are like tax efficient or tax exempt, so the tax implication is minimal or completely absent, and so you will not, at the tax implication, they will not really affect your portfolio that much. And so dividend reinvestments can significantly enhance the total return from high yield stocks by compounding growth. Not only that, increasing ownership, and as well as taking advantage of market fluctuations. You buy when the market is high, you buy when it is low. At the end of it, you discover that you have a stable, lower than average, lower than normal price per share of the stock you bought. It is a powerful tool for building wealth over time. You have that long-term mentality. I think it's a powerful tool for wealth building if you want to really hold the stock for the long term.